Good morning and welcome to Morning Markets with True Potential. Checking up on news and developments over the past 24 hours, we saw markets were soft overall yesterday with investor sentiments being hit by two things mainly. A number of Federal Reserve governors came out yesterday and reiterated their stance of maintaining higher for longer rates overall in the US. Then we also saw at the same time protests in China. In major cities like Shanghai and Beijing, we saw a number of protests and the crackdown that has been happening given the anti-COVID restrictive policies been implemented by the Chinese government. So we saw a softer tone coming out of Asia. The Chinese equities, both mainland and Hong Kong listed stocks were particularly hard hit on the news, but we have seen some rebound this morning and we have seen some stabilization in overall markets in Asia, which have fed into the overall broader Asia, but also this morning in Europe as well. If you focus on the fixed income market, we saw US Treasury and gilts market doing a full round trip. We saw some safe haven buying early in the trading days in the US on the protests news from China, but we saw that being faded away and we saw a sell-off in Treasuries and gilts market overall, given the rhetoric of restrictive policy stance, with number of Fed governors coming out yesterday reiterating their policy stance that the rates may stay for higher for much longer than pre-markets are expecting. Overall, both US Treasury, 10-year Treasury and 10-year gilts ended their flat. We saw some buying into US dollar. The US dollar found a bid both from the safe haven buying once again, but also from higher for longer rates, which increases the interest rate differential favorable for the US dollar. Though we also saw some safe haven buying into yen as well. So overall, both dollar and yen were the winners from yesterday. We saw similar dynamics being repeated in oil market. We saw oil being sold off early trading sessions, both in Asia and then in Europe, given the protests will hit, the ongoing protests in China will hit the global growth, particularly Chinese growth, which is one of the largest importer of oil overall. So the oil at one point was trading at $74, that is WTI, the benchmark for the US crude oil. But we saw a number of OPEC plus members coming out yesterday as they go into their OPEC meeting at this weekend. There were hints being dropped that the cartel may look to for increased production cut as they meet on Sunday. Elsewhere, we saw ECB President Christine Lagarde coming out and reiterated her policy stance that ECB may have to maintain the restrictive policy for some time as she continues to see pressures of inflation staying in the coming months. Though we have seen some softness in energy costs, energy prices, but she is of an opinion that the bank will have to maintain the restrictive policy stance for some time. If you focus on the data front, we saw Dallas Fed manufacturing activity data improving a little bit from the previous month. It was better than what markets were expecting, but important development there was we saw a labor softening. A number of factories and employers were hinting they're looking to increase their layoff in the coming months. Why it's important? We are in this non-farm payroll week for US, where investors will be looking for further indications if that momentum, that survey news feeds into the November job reports overall. So it's in that context, the Friday non-farm payroll reports in the US will become important. Watching for today, we saw this morning a number of inflation prints from Spanish data. Inflation came on in softer than expected. Actually, we saw a drop in inflation on month-on-month basis of 0.1%. That will feed into later German inflation, which is also expected to drop by 0.2% in a month. So overall, we have seen some softening data in inflation, but we'll continue to monitor that data and we'll keep you posted on as they come along. Thank you very much for watching Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.